Hello there, everyone. Interesting case to report to you today on contract for differences. So, specifically, a court case, the decision of which was actually announced earlier this year. But I just wanted to highlight an important point with regards to loss relief and how you can go about claiming it, and in this case, how it was denied. So, fundamentally, contract for differences, CFDs, that is taxable in the UK. Any profits that you make on that are taxable. That's the first thing. Compare that with spread betting. Spread betting activities, the winnings or losses on those are free of tax. No tax. No tax on the winning from spread betting or tax relief on the losses for spread betting. So these particular individuals with which this court case pertains to were undertaking contract for differences. So, like I said, fundamentally, CFDs, they are subject to tax. So, but if you make losses, then you get tax relief. Now, generally, what tends to happen is when you are having losses like this, if you were just doing a few CFD losses, a few CFD contracts that had losses, you would make a capital loss as opposed to a trading loss, and that capital loss can be set off against future capital gains or capital gains in the current year. But technically, you are kind of restricted what you can do with that loss, because capital gains don't come around all that often. In fact, most people in the UK, the only capital gain they ever have is their main residence, which of course is free from capital gains tax. So capital losses aren't a lot of good to a lot of people. So what you really want is income tax losses. Now, how you go about converting a capital loss to an income tax loss is all about the intention and the type of trade, type of business that you're undertaking. So these guys said, look, we're doing these CFDs, they're subject to tax, we made a loss, we want to claim the loss. Now we would acting as professional CFD traders, which means really that loss is a trading loss. It's not a capital gains tax loss. Why would they want that? Well, the beauty of having a trading loss is that it can be offset against all sorts of other income. So these guys were high earners from other jobs and they had big salaries. This was not a full-time thing for these guys. But actually, participating in this activity, the CFDs, they'd hope, which would generate these losses. Remember, these were kind of convoluted losses. They weren't economic losses, as I call them. They didn't lose a shed load of money, but on paper, they did. They lost best part of £1 million each. So they try to set off that £1 million against their other income. It's called sideways loss relief. So having these income tax losses a lot more flexible and useful than capital losses. So what went through the courts was actually the judge said, look, and HMRC argued that these were capital losses, not trading losses, because these guys were not full-time derivatives traders. They didn't do this for a living. They had some high-flying jobs, and they undertook a bit of tax planning that they thought would mitigate their income tax bill on their regular salaries, their other earnings, their income, and they hoped that this trading loss on these CFDs would be offset against that. And basically HMRC said, no, that only applies if you are in the business of doing CFD trading. If you're a full-time day trader, if you've got a professional operation in place. And they went through all the facts in the courts, and the court basically agreed with HMRC and said, look, this is not, as they say in the tax world, an adventure in the nature of trade. You have to look at what's called the badges of trade, which is quite a well-known set of rules set out in case law and tax history that sort of determines whether or not you are in business, for want of a better phrase. And ultimately it transpired that these guys weren't in business at all. This was a bit of it was part of a tax planning idea that someone had told them would work. Unfortunately, it didn't work. They were not sophisticated enough CFD traders for it to be recognized as an income tax loss, which you could set off against other income. Instead, it was a capital loss, which, like I said at the top of the video, a lot less useful, because if you've never got any capital gains to set it off against, what's the point of having a capital loss? So just an interesting case there, just on the loss relief rules and how you would they apply in the instance of trading for CFDs. It's interesting in the tax world for generally, if you've got, on the flip side of losses, if you've got gains, if you've got profit, a lot of people will try and have that classed as capital rather than income, because capital gains tax rates are lower than income tax rates. But this was the opposite. This was the corollary. These were losses. And in this case, the loss rules are more beneficial if it's an income tax play as opposed to a capital gains tax play. So just an interesting take on this kind of norm there, as it were, because most people who try and convert from one to the other normally go from income tax to capital gains tax for that favourable treatment. But on the loss side of things, it's kind of reversed, and the opposite is true. So just a quick overview there on court case involving contract for differences and claiming loss relief. If you like this video, please do subscribe right there, and I'll see you soon.